Hello, everybody. Welcome. This is a redo of one of my videos. I make mistakes, and so I want to thank my students for helping me catch those mistakes. In any event, this is the walkthrough for exercises 18.9 and 18.10, which is for cost, volume, profit. The author of the textbook are Paul Kimmel, Jerry Wangan, and Jill Mitchell. This is the Accounting Tools for Business Decision Making, 8th edition. The question used in this presentation is copyright 2022 by John Wiley and Sons, or Wiley, all rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. My solution presentation is copyright 2022 by Bennett Tchaikovsky, all rights are reserved. The opinions contained within this presentation are those of myself and not the authors of the textbook or of Wiley. Okay, before we say thank you to Wiley, let's go ahead first and go through and take a look at our problem. So we have the Palmer Acres Inn is trying to determine its break-even point during its off-peak season. The inn has 50 rooms and it rents at $60 per night. Operating costs are as follows. So we've got salaries, property tax, depreciation, maintenance, maid service, and then other costs. So when you see the term per month, you know that that is going to be a fixed cost. If you're seeing per room, that basically means it's going to be tied into the room costs. Okay, so right over here, my contribution margin ratio is going to be my contribution margin per unit divided by the sales price per unit. My break-even point in units are going to be my fixed cost. Over here is my fixed cost by the contribution margin ratio. Now, what you're going to go through and see me do with these videos is that I will go through and solve the question using the ratios. But what I am going to do is once I figure out the break even, whatever may have you, then at that point in time, I'm going to go through and then say like, okay, now that we know what our basically now that we have our numbers, do they actually make sense? So if I have 50 rooms that I'm renting at $60 per night, that means my sales price per unit is going to be at $60 per unit. It's going to be my sales price. Okay, less my variable cost per unit, and that is going to be the 14, which is my maid service, plus the 28 or $42 per unit. So my contribution margin per room is going to be at $18 per room. Okay, so in my contribution margin ratio is going to be $18, which is my contribution margin per unit or per room. My sales price is at 60. So my contribution margin per room is going to be at 30%. Now, my break-even point in units is going to be my fixed cost. Now, this is where I messed up the question because I forgot to include the maintenance. But over here, my fixed costs are going to be my salaries, property tax, depreciation, anything where it shows where it says per month. So over here, this is going to total up here to be a total of 80. Is that right? Yeah, 8,100. Okay. So over here, my fixed costs are $8,100. My contribution margin per unit is going to be over here at 18. So my break-even point in terms of units is basically going to be 450 rooms. My break-even point in dollars is going to be an $8,100 fixed cost divided over here by my contribution margin ratio, or 0.3. And this basically means I'm going to have $27,000 break even in terms of sales. So now let's go through and figure out the numbers. So over here, if I'm doing a contribution margin income statement, also sometimes called a variable costing income statement. I'm going to have my sales. Okay, my units that I'm selling are going to be 450. My per unit sales price is at 60. So over here, my total revenues are 27,000. Oh, this happens to be the same amount over here, less my variable costs. If I sold 450 units, it means I need to take 450 units to cost of goods sold. My per unit on the variable is at 42. So over here, 450 times 42 is going to be 18.9. So my contribution margin is going to be 27,000 minus 8,900. When I subtract my fixed costs are at 8,100. So therefore, my net income or break even is going to be over here at 0. This is why when you do these questions, right? If you're taking my class or if you're doing these anywhere, don't just rely on the ratios. You're going to make a huge mistake. You need to make sure to plug it in, make sure it works, and then you can know that you actually got the correct answer. Just practice it going through it this way. If you're taking my class, I tend to give you the ratios. I don't like students having to memorize anything. So especially something like this, because when you're in practice, you can just go through and look it up. But again, this is how you would go through and do this. So that's exercise 18.9. Again, I want to thank my students for pointing out that I missed out on the maintenance cost. So over here, let's see where I screwed this up. And I absolutely did. I missed that one over here. So that's wrong. Okay, so let's go over here and went through and serviced 560 clients at an average price of $120. During the month, fixed costs were $21,024 and variable costs were 60% of sales. Determine the total contribution margin in dollars, the unit contribution margin, and the contribution margin ratio. Using the contribution margin technique, no idea what that is. Compute the break-even point in sales dollars and in sales units. Okay, let's go over here to the formulas and let's kind of try to go through and figure this out. Okay, so over here. Okay, so my contribution margin per unit is going to be my sales price per unit, which is going to be 120. Okay, if my variable costs are 60% of sales, then over here, my variable cost must be 72 per unit. So over here, my contribution margin per unit is going to be at 48. Now, my break-even point in units, or say over here, my contribution margin ratio, contribution margin per unit is at 48. Sales price per unit is at 120, so this is going to be 40%. Over here, my fixed costs were $21,024. My contribution margin per unit is going to be at 48. So this over here is going to tell me that my break-even point in terms of units is going to be 438. Okay, so break-even point in sales dollars, fixed cost divided by my contribution margin ratio. I divide this over and I get 52,560. Okay, so determine the total contribution margin in dollars. Okay, so the contribution margin in dollars is going to be whatever it needs to be to make the net income go to 0. And actually, I take that back. Let's go now through and kind of work this through. So if I serviced 560 clients, actually, that's a good trick question. So what is the contribution margin in dollars? Okay, so now what we need to do is we need to say, okay, sales, in terms of my units, how many clients did I serve? Well, I serviced 560. My per unit in terms of my sales price, right over here, is going to be over here at 67,200, less my variable costs. By whatever I sell in terms of units, I have to have my variable cost per unit is $72 per unit, or 60% of my sales price over here. So my variable costs are a total of 40,320. So my contribution margin in terms of my sales dollars is going to be 26,880. Right. And how did I get this? Right. So I had 560 units. My contribution margin per unit is going to be my sales price minus my variable cost per unit. If I check this through, it equals the 26,880, which is going to be the same result as that if I go through and subtract these. So less my fixed costs. My fixed costs over here are going to be 21,024. And so my net income using variable costing, or basically over here, that's what it's going to be. So determine the total contribution margin in dollars, it's 26,880. And the contribution margin ratio, my contribution margin ratio is going to be at 40%. Now, compute the break-even point in sales dollars and in sales units. Well, if this is what I initially went through and sold, I'm making a profit. So I know that the units I'm going to be selling are going to actually be less. So for break-even, right? So I've got over here. So my units for break-even, we said that this is going to be 438. So over here, if I sold 438 units, and I need 438 units for variable costs, 438 units towards a contribution margin. My per unit is going to be at 120, sales price, 72.48. When I go through and multiply this through, I've got 52,560, 31,536, and 21,024. My fixed costs, they're 21,024. So this is going through and being at break even. So my break even point in sales dollars is 52,560. And my break even point in sales units is at 438. But again, when you're doing break even, make sure you take the numbers and plug them in. Make sure that they work, right? Don't just rely on these formulas. Again, I've seen students constantly make this mistake, especially when on my tests, I'll start messing around with stuff. I'll say, well, the variable costs increased by 20%, sales price decreased by 5%. What happens? So again, just keep that in mind. But anyways, I want to thank again my students for pointing out the errors of my ways. I make errors all the time. Seemingly, I'm making them more and more. Don't know what's happening, but at least I admit them, right? So in any event, I want to thank Wiley. Please don't forget to like and subscribe. If you're looking for other solutions, please feel free to ask for them in the comments. Have a great night.